Hello guys, this is Sarab, Trader Sarab, as many of you guys know, and today we're going to be going over the fundamental analysis. So it's one of the main important thing I like to do anytime when I'm looking at a stock, that I'm going to be investing in. I always look at the company. So I'm going to show you a couple of very easy way to really look at that. So for example, we're going to do a couple of them. We're not going to do a bunch of them. So we're going to look at a company like Apple, which I'm sure majority of you guys know Apple. So I just Google it and then I just come down to it and look for the Yahoo Finance link, Finance Yahoo. And that will bring me to this Yahoo Finance version of Apple. So you don't need to get fancy, get all the charting and everything up. Right now it's just a fundamental analysis, and this literally takes like less than 5 minutes on any company that you're really looking to invest in and do your homework on. So first thing I like to look is like the holders, like who are the main shareholders in that company. So if you just click right here on the holders, you'll get to see the list right here. So it also breaks it down for you nicely over here. The insiders, the institutional, you know, numbers of institutional holding share, and right here, this is the main thing. Like who are the top institutional holders and what percentage they have. So you can see Vanguard is a big one. It has 7.53. BlackRock is another one, 6.35. So the rule is anytime you own more than 5% of the company, you actually have to report that to SEC. So, all that information become public. And right here we can see all these big company holding, and you can also see if you don't want to own the stock but you still want exposure to that stock, you can get like a lot of their ETFs, and somebody tells you what ETFs are part of this one, of the stock. And the second thing I like to go over here is financials. To me, that's more important than anything else. So when I'm looking at it, before I even, dig deep into this boring stuff, and you don't have to be an accountant. I'm not an accountant, but you just need to look at the key important information before I even do any of that. The first thing I look at is like the earning right here, because it tells you how the company is doing quarter over quarter. So you can see this purple circle over here. That's the expectation, what the analysts are expecting this company to do. And the green dot is showing you it is beating that expectation. So you can see, or you can visualize it right here, or you can see at the bottom right here, they beat the analyst by 10 cents, 8 cents, 19 cents, 44 cents. So we know this company is heading in an upward trend, because it just keep beating expectation. That's a very good sign of a good company that is doing what it's supposed to do. It's a leader in its industry and it's progressing and just keep capturing market share in the industry, whatever they're selling or whatever they're doing, and they're creating more demand for it. Right now, the expectation is down right here because I think they may be factoring this coronavirus. So you can see, where the expectation was and what the expectation is right now. And obviously on the earning date, we'll find out more. Second thing I like to look right here, this is an easy, lazy way of doing it. You don't have to, if you don't want to dig deeper into the more stuff, you don't have to. But this is right here, give you the visualization of what the company is doing. The revenue and the earning. The revenue is like how much total sale did that business had. And out of that, how much is earning they created the value for their shareholders. So you can see, the revenue is going up right here. 2019, they had it like a little bit smaller than 2018, but for a company like Apple, I wouldn't worry much because now the product is becoming more, like the iPhones are built for a lot longer. People are not swapping their iPhone upgrade like every year like they were doing in the early cycle because the technology was evolving so quickly. Right now, I know majority of the people, I would say like 70% of the people I know, they have older iPhone because it works perfectly fine unless they need new technology or they're really into the selfies or the camera features of it. And then you can also see the earning, how they're creating it. So right now it's showing annually, then you can go into quarterly. So quarterly you can see, how is this happening in like last 4 quarters. And right here, as you can see, Q4 is like the Christmas time, which is normally the best time for majority of the companies. So you can see that, it had like a nice earning because a lot of people are giving as a gift or whatever the reason might be. Now, if you want to dig deeper, this is where you dig deeper. Income statement is usually the first one that automatically comes, and same information that you saw over there will be over here. You can do it by, yearly, you can do it by quarterly, so right here it's already default to yearly. And TTM is like, I believe it's a 12 months average. So we can see the revenue has been going up. A lot of time you will see the revenue is going up and the profit is going down. And that might be because their operating expenses might be going up. So you always have to like keep in mind, like, is the revenue, the sales are going up? Like, think of it, for example, if it's costing Apple to make this product $400, and they're selling for $1,000, so the manufacturing cost is $400, then they're going to be selling for $1,000. That's a $600 profit. But in order to get that $600 profit, obviously they have other costs. They have their overhead, sales team. They have so many other expensive and also research development, other stuff that goes into it. So at the end of the day, they might be spending additional $300-400 because of their expenses they have. So at the end of the day, their true profit, which they call the net income, might only be like $100 to $200 depending on whatever the case might be, depending on when they sell it and all these other factors. So that's the number that really matters the most. And we're going to look at another one company, and that will put things in perspective for you. So we can see the net income. So the net income, you get it by total revenue minus total operating expenses. If you subtract those, you get the number of total income, total net income. And you can see, the net income over the years, is going up, which is a good sign. And as we saw in the other photo, last year, it's had like a slight dip down compared to the year before, because right here is 59,000 and last year is 55,000. Then they have the other stuff like EBITDA and all that stuff. You don't really have to get into it, but if you want to look at it, you can look at it, But at the end of the day, the trend is going to be the same thing. Other thing you may quickly want to glance at is the balance sheet. Balance sheet over here will give you total asset held by the company minus the total liability. So that will give you a good idea where the company stands. Most of the time it's not really needed, but if you just still want to take a look at it, it's always good to take a look at it, especially when you're going to be buying the stock for a long term. And you can see stuff like net receivable, like how much money they still waiting to receive. The inventory, are they still doing it? I believe in like a pot stock, there's too much inventory. So if you look at any of the pot stock, you'll see they might be having like a lot of money over here in the inventory because they're not able to sell as quickly as they think, and the demand is slowly dying out because there's too much competition. Also, you're going to see right here, like a lot of the companies, you're going to see the goodwill. It's going to have like a decent number. I mean, right now over here, we're not seeing it for, Apple. But a lot of time the goodwill is like the company's image. What is the company image is worth? Because the company that's been around for a very long time has a good name. The goodwill is worth a lot more. And they also have this intangible asset, which is similar. Like, something that is similar to goodwill, where you can't really touch it, and it's not there for you to just trade it off, but just based on the people's perception. So, you can come over here, total liability, like with the total asset. At the bottom, you get these number, total stockholders' equity, to each stockholder, what is the equity and all this stuff. As you can see, it's been going up. Then the last year, it just took a like slight dip. And now this is a very important one right now, especially for the new companies, for the IPOs, and for the companies that you really want to invest in, but you're not sure if they're going to survive or not. A lot of the companies that are in the growth phase, you really want to, check their cash flow. Like Tesla was in a very bad shape last year before it started going up to like, crazy expensive. because a lot of people, even Elon Musk himself, admitted that they were maybe like 10 weeks away from shutting down their factories and everything because they did not have enough money. And when they talk about that, that means cash flow. How much money do they currently have in order to continue to do their operation? So you can see all the information right here. Total net income that we saw in the income statement kind of like falls over here as well. Then you can see different categories. You can dig deep into it, but for the starter, I'd say you don't really have to worry about that. Just take a look at the bottom number, which is the free cash flow. So, at the end of the year, like, what is the number? Like, are they positive? Are they negative? So over here you can see Apple is a very good company, so their cash is just increasing, while another company, we'll take a look at it like a couple of different examples. You'll see the other company, the cash flow is decreasing, which is a bad sign. And one other thing I'll show you, and as some of you probably already know, like depreciation and amortization, like depreciation is like a paper loss. It's just like the equipment and everything they're able to lose. It's not a like real loss that really takes place. So just for the accounting number they use. And another tip I'm going to give you, right here in the income statement, you can see it should be research and development. This line is very important, especially when you're looking for a company to invest for the long term, because research and development is what is the company doing right now to come up with the innovative product for the future. And this is very important because if the company is not investing in its future, it cannot remain at the top place. There's going to be competition is going to be coming and they're going to be taking away. So for the good company, you do want to see a big amount of numbers going over here. Not too much ways affecting the cash flow, but at the same time you do want to see decent numbers over here for the research and development, because that's going to be determining the future of that company. And you can see Apple, it's like right here. I believe these numbers are multiplied by, I don't know, 1,000, million, or whatever. You can just double check it. But you can see the numbers are increasing, which is a very good sign. Like, they're spending more and more money in their future. So that's pretty much it. This is, the basic fundamental that you should be looking at every time when you're looking to invest in a company. So right here, this is annually, and you can look it over here quarterly. If you click over here, it will switch everything into the last 4 quarters, and it can give you, especially comparing from last quarter to right now, it will give you a lot better idea how are they doing it, because sometimes you will see in one section it's going to increase, then the other section is going to decrease. So you can, depending on how much time you have, you can analyze it, but for the basic, this is really going to do you very well. Now to take a look at another company, let's take a look at Lyft, because I know, like, we talked about it, like, how this company was an IPO and this company was doing very well, but we all believed that this company is shit, and we were short since it came in. I think it was close to like $70 or something. And I still think the company is shit, and I wouldn't be surprised in the future there might be a possibility for them going bankrupt, especially with what's going on with coronavirus. This company is hit pretty hard, and it's not only this company, majority of the companies are hit very hard. So we can take a 52 weeks range. You can see that this stock went down as little as $14.56, and the 52 weeks range is $88.60. That was the highest it made since after it got IPO. Let me see if this $14 was recent. Yeah, I believe it was recent. So we can look over here, as I mentioned, for this one. Holders, who really owns this one. And sometimes you might see on certain stocks some big hedge fund company or somebody's holding it, and that's a good way to really, look at it. Like, if you like certain companies and they really do very well, and you can try to see, you can do like a little reverse engineering and find out what other company they are investing in, because all that information is public information. A lot of time it might be delayed. It's called 13F filing. So you can check everything online, and it will show you everything. So maybe we'll discuss that like a little bit later on, in maybe a couple of weeks when we look a couple of more different stuff. So right here you can see, JP Morgan Chase, BlackRock, Alibaba, there's a lot of companies that's actually buying this one, who bought this one, who are actually still holding it. And even the big company make mistakes. Alright, so we can see right here the income statement. So as expected, this is a company, a share writing company. Obviously their sales are going up, which is a very good sign. You can see, they've been increasing. First they triple it, then they double it, now it's 50%. So their growth is also being like a little bit affected because, they went from 300% to 200%, then now only up by 50%. And we can take a look right here that this is a number that's concerning. The operating expenses is increasing crazy. So first it wasn't that bad, then like right now, like from last year to right now, they more than doubled their expense. While their revenue only went up by 50%, their expense almost went up by twice as much. And at the bottom, this is a number that really makes it sense, which is a net income. You can see they're negative. Even though this Lyft and Uber are a car sharing company where they're just taking money for every time a customer rides, at the end of the day, they're still spending too much money on operating, paying out maybe employee salaries to other people, advertisement, whatever else they're doing it. They're still running the company down, even though it's a company they guarantee to make money. And based on my information, when I spoke to a couple of the drivers, they normally take in close to 30% of the profit right off the top. And certain place they take more, sometimes like less, but on an estimated average, they take 30%. So if the cab ride is, let's say, $50 right off the top, this company is making $15. That's going to the company. Then they're going to pay the Uber driver later or the Lyft driver later on. So that's the way it's working. So it's guaranteed to take all that money for just connecting the driver with the rider. And they obviously have the share writing. But the way you're looking at it right now, at the end of the day, they're subsidizing, I can't even say it, all the riders to take it for cheap because they're losing so much money. Or they're just not running good operation at all. So you see that how it's not doing well, and obviously the rest of the stuff is going to look the same way. And you can look at the note payable, note receivable, other stuff, but you really don't have to go dig deep unless you want to. You can see total cash, total assets, total current liability. So over here, as far as the asset wise, they look a little bit better because they're improving. They're going from negative to positive. But at the same time, you can see it's reflecting in their stock. Like the company is doing horrible. It's worth 25% of what their company is really worth. And I don't think so things will be getting back. Good for them. And here's another thing that I was mentioning to you about the earning and everything. You can see, I'm like, even in the starting, like the expectation was like negative. They were not gonna go ahead and make money for the shareholder. This is like zero. Like they were expected to always have negative earning, to lose money. And the cash flow, we can just come to the bottom, take a look at it right here, losing money. They're losing so many millions, billions of dollars. It's not even funny. But this is like a little bit better sign. You can see at least if you're a shareholder, this is like a little promising sign that it's having